Hello, everyone. The topic for the day would be business acumen. What actually takes a person to become a successful person, a successful entrepreneurial venture? What it takes and what actually matters to him. This is exactly that we will be talking today, and in this next half an hour video. So many people believe, many actually all of us believe that the spirit that is imbibed on us is destined to do great things, better things in the world. So it is a loosely defined as an ability of an external market to make effective decision. Why? Because we believe that essentially I am for the greater cause, the better abilities of the society that can be brought forward, knowing what is necessary to navigate and creating a successful business seems innate, seems inborn, and we believe that we are the good and the better soul that is there in the society, and probably we can have positive impact on it. So basically, three things that we'll be talking today out here would be how do we manage our risk? That is very true. A successful businessman, a successful entrepreneur knows how to mitigate risk. Then we will definitely give you a brief overview as what kind of financial know-how that you need to possess, and the various levers, the various milestones in the finance that needs to be taken into consideration. Seeing the big picture. So business acumen requires definitive understanding of strategy, definitive understanding of finance, and most interesting thing would be optimum decision making abilities, taking the right decision at the right time for the right project. Most managers and employees, however, are responsible for a particular areas. They have a little understanding of the decision that their decision can have or make an impact on a different areas altogether. Probably somebody is working in marketing, probably he might say, let us give a little bit of a heavier discount or a heavier brokerage to the vendors altogether. But does it impact the raw material? Does it impact the cost? Does it impact the production process? Does it impact the profitability? He or she might not be able to gauge the situation altogether. So seeing the big picture is what it takes. Remember, details create the big picture. So we'll talk about interactions both in terms of longer duration and shorter duration. Most often than not, we believe that building relationships is the crux of any successful business venture. Once the employee and the customer strike a chord of mutual respect for one another, I'm sure the customer is not going to leave that organization or stop giving business to the organization at any places. Now, how do we build that relationship? Is to evaluate or understand the feedback, or probably evaluate the situation as to how better the service can be extended to the customer. That is what we are talking about. Offering values. This is what we will talk about. So recognize growth opportunities. We need to understand what are the market trends that comes around it. Actively research customer needs. Basically, what I have said about it, it is the employees, the in-house customer, and the out-house customer or the end client that we're talking about it. If we can understand their requirement and probably suffices it, nothing can go wrong with us. Pay attention to competitors is one thing that we need to understand as to what our competitors are doing. They might be playing a one upmanship game with us, and you need to be one step ahead of your competitor. That is a must requirement. So mindfulness of decision is being in the moment, living the moment, being present, being omnipresent as much as possible. That is what is all about requiring it. It is like living your decisions altogether. Be it the decision that you take for during the marketing operation, the sales operation, or just during the operation part of it, or inventory decision, buying decision, manufacturing decision. Be out there. Be clear about what is expected and what is not expected. How do you want to mitigate those expectation altogether? And definitely make a choice. This is true. Be clear and make a choice, or should I say decision. This is all about decision, making a choice whether you're going for where out subletting or business process outsourcing altogether to a vendor, or you are going to manufacture or make decision within your own premises. That is the choice that more often than not that has been taken care for. So everything, remember, everything is related to one another. In fact, the whole ecosystem of business, the society, the environment is interlinked. So always be very comprehensive in your approach. Have a balanced viewpoint. When I say balanced viewpoint, you need to understand that one of your decision might have a beneficial impact to a couple of department, a couple of strategic business unit, or probably a couple of geographical areas that you are covering out. But it might not be that impactful in other areas, other functional spaces, and so on and so forth. So be balanced and definitely take everyone's considerations into your decision making. That is to be incorporated everything every now and so KPIs, we all understand, is key performance indicators. Remember, absolutely, the price of light is obviously less than the cost of darkness. So best thing is understanding or having a clarity, being very transparent. So understanding when goals reach to be necessary, a particular business acumen. KPIs are nothing but it is the fundamental data or the metrics that shows that you have achieved, reached your goal. Every company will have different KPIs, probably depending upon the industry requirement, depending upon the entrepreneurial venture requirement, depending upon the of that particular locality, geographical areas, anything that you might consider around it. So we come into decisiveness. Now, decisiveness is where you come to consider your decision making abilities in the very first place. What decision are you going to take out? What are you going to help out? So define the areas to monitor. So right, remember that principles of Pareto's 80 is to 20, wherein if you can control 20% of your decision, you may have an impact which is equivalent to 80% of the revenue. So those things, these areas needs to be defined, which are the vital areas that you got to go around it. Once the vital areas, the functional areas has been decided upon, the geographical, be it portal, be it a vertical, be it a product, be it a service, whatever area that you define it as, after defining this, select the criteria that needs to be measured or upgraded, or should I say updated. And once you define those criteria, can we start measuring? Because everything that can be measured, remember, can be managed. Again, first, for decisiveness, define your areas to monitor, identify the criteria, define the measurement is a must thing. Then comes the flexibility. So what is flexibility? Is change as goals changes. You should be adaptable, you should be receptive, you should be dynamic with the changes that is occurring in your environment, with your competitors, with the taste of the customers, or should I say the profile of the customer. So change is the pertinent thing that goes around it. Once this is there, once you have embraced change, you can always review and alter them altogether. Remember, employee buy-in is essential. Most important thing is percolating your dreams as an entrepreneur into the minds of your employees will lead to a definitive success of your business venture. So be flexible, then takes be strong initiative. Recognize the spot for improvement. Show confidence. What is the recognized by short spots for improvement? There, at times what happens, your business is definitely doing good. It is churning out money, but probably one of those areas are not contributing as effectively as other areas are, as other areas are showing vitality. So this recognize the spot which can be improvised upon. Believe in them, show confidence, look for solution, not the problems. Everybody who will be talking about problems are the mortal beings. Remember, only a successful person is not looking at the problems but also thinking and coming up with a solution. That is what is it count. So offer immediately when you see there's a problem, when you see there's a gap, try to fill it up as soon as possible. The more the time you take, the late your decisions are, the worse it is for the organization. So try to fill up all the gaps, be immediate, be proactive, and please understand, learning from your own mistake is the biggest step to success altogether. Biggest step to success will be learning from your mistake and eliminating them procedure. So be intuitive. So needs to understand. You should always think in your mind, and your cognitive abilities should be very strong, which needs to be understood as what are the problems that you're coming up with. So define those questions. Now tell who are the people who has been getting affected. Is it your employees? Is it your vendors? Is it your shareholders? Is it your customers? And accordingly, if you can answer these two questions, you will automatically reach this particular question as to what actions are required. Once you have understood the actions, because this action needed would eliminate the requirements of which and who. So risk management strategy, remember the first and most normal risk of the management of the strategy would be to acknowledge there is a problem, to acknowledge what can go wrong and what can go right. Risk management involves different strategies. The purpose is to identify and assess risk and prioritize them in order to monitor. Remember, that is very true. You need to monitor as to one, then comes two, then comes three. You need to speak it up again and again. You need to prioritize everything and accordingly mitigate as per the priorities, reduce threats to the company. So implementing risk management requires a look at a very big picture in the future and taking appropriate decisions for the definite benefit of the organization. Nothing else. The definite benefit of the organization is a must. So, incremental changes, incremental improvement is the call of the day, is the demand of the day, is the need of the day. So, how do you go about for those incremental improvement? So, basically, it is all about continuous assessment. So, what we are doing, we need to understand: are we deviating from the original objectives? So, recognize objectives. In case we have achieved those objectives, now make a newer objectives, align new objectives towards yourself. What are the definite event that is happening which is beyond your control, which is identifying potential event. Certain events are beyond your control, certain events are definitely within your means. For example, the economic impact that is happening with the pandemic, probably the impact that is happening with the global fiasco over the war, that might pursue in Europe with vis-a-vis war ground would be Ukraine as such. So determine the probability and impact of risk. Remember this thing. How is it going to impact you? How is it going to impact your organization? How can you mitigate those risks? Please understand and then come out with certain possibilities, the impact and possibilities of how to go around it. So these three things which you need to understand: first, to recognize objective, identify potential event. Immediately after you have identified it, define the probability of how can it be impacting in a positive or a negative light, and based on the impact you need to come up and ship out the comes all together. So we have the internal and external factors. What are they? The internal factors are cash flow and employees. So this is within your control. But what are external? Probably taxes. The taxes might changes over a period of time. The government might give you some subsidy, might levy a major tax. Depends upon the government and so on and so forth. And then there are suppliers. The suppliers can have their own bargaining power altogether. Remember, these are external factors that affecting your businesses. So making adjustment. Now, how do we go around it? So first and foremost thing is definitely of monitoring, keeping a bird's eye view as to the operation of the company is going around it. If the bird's eye view are always there, employees are in control, objectives are objectives are definitely met, processes are in orders, and so on and so forth. Now, if there are anything going wrong, you need to improve the performance. Mind you, if things are not even going wrong, everything is going right, can we hasten the process? And that is what is of improvisation is all about it. So improve your performance despite the fact that everything might go wrong or otherwise. Risk change, that is what the abilities and one of the features of the entrepreneur is all about it. Risking change, studying it, studying the environment at short notices, probably taking decision at a speck of a time, and probably implementing them to achieve the pinnacle of success. it. So knowing when to pull the trigger is very important. Not every program will succeed, not all your ventures, remember, not all the ventures that you want to embark upon will be succeeded. There are opportunities cost. What are the opportunities cost? Opportunities cost are the cost that you could have done something better with the available time, resources, and effort that you are putting it up in places of what you are actually doing out. So there are always a CBA, cost benefit analysis, that needs to be taken. Selected actions are the alternative decisions that we actually impact upon or implement, is what we go around saying. So knowing when to pull the trigger or plug the trigger is vital. So what has been the learning events every day? Remember, every morning is a new morning. Every morning gives us a new opportunities of doing something new. Individual with business acumen are able to recognize the learning events and take advantages of these opportunities. To be successful, you must be learning. As you gather knowledge, you will find yourself learning from your own mistakes, and improving your own decision making abilities and skills will improve over a period of time. So remember, each day you should be a better version of your previous. So develop a sense of always learning. This is what is imitations. We learn from observing, exercise, practice creative learning experiences, practice, create learning experiences. Now, that is what is all about. Exercises, be into the case study, toy up with your ideas, have a pilot survey, have a pilot study for any of the ventures or any other idea which is there in your mind. Experiment different outcomes that can come around it. What will happen if it is succeed, if it doesn't succeed, if it partially succeed, and you need to understand those possible outcomes and how do you manage those outcomes is very vital. Debate, interactions with the others, and so on and so forth. You have to interact with others, help them out, talk it out, and everything will be coming in connection to your objective. Evaluate past decision. What are the outcomes? You must, as an individual, did I say that you must be a better version of yourself than the previous day? So you remember there is in the history in the past, what was the outcome of a certain action that you have taken. So you need to understand the outcomes altogether. Did it meet your expectation? Was it a success story, or was it a nearby mess, or what is it, a complete or utter failure? Or should you repeat those decision accordingly? Now, depending upon the success rate, depending whether it was a huge success or a mediocre success or an utter failure, you would have to take up call ki yes, I may repeat the decision. Remember, you may have faulted previous days or past data might be seeing wrong, but with the change environment, with the change dynamic situation that the society might spring up, probably your decision that was faulted upon, that was not so successful in the previous years, might be an actually a hit of late. So you should always keep every of your decisions, everything from the past in your mind, and take a decision. What is a blind spot that goes around? Is requesting a feedback? Definitely yes. We are not an omnipresent. We don't have every data, every possible historical things in our mind, and it doesn't we cannot recollect it all the time. So always have a team to back it up. Always throw your ideas, or should I say bounce your ideas with somebody else. Reflect, very true, and then possibly before implementing, objectively study it with all things in your mind. Objectively study everything. So you need to know these answers more often than not. Remember, without knowledge, action is rudderless, action is useless. But knowledge without action is again futile. So you have to balance between knowledge and action. You cannot have an action without knowledge, and you cannot have knowledge without action. If you have the knowledge but you don't take the requisite action, again doesn't make any changes. The status remains status quo altogether. So running business is a complex enterprise. In order to look at a big picture in your business, you need to know the answer to a very basic financial question, and definitely your accountant should know about those information. If not you, business acumen requires you to be aware of those answers so that you are able to guide the company's success as per your decision desired thing. So let us come out with it. So what makes my company money? One is your product, the other one would be your services, and probably the change environment or the influences that comes across it. So examine your product, examine your services, and decide upon your future. So what were your sales? Answer these pretty peculiar or pertinent question. Identify growth. What was your sales last year? What was it that clicked? What did it click, and why did it fail? So, and the status quo as of today. So, you need to understand your growth previous year, the essential information that was going around it. For example, we had COVID-19 for the previous 2 years. Current status of the company, how we are we going to charter the company in the forthcoming. So, what is a profit margin? Remember, this is very true. We need to be a well-oiled machine, a profit-making entity, so as to go around it. At least 13% net margin is required off late, and this margin can be changed already. It can be 43 also, it can be 63 also. Net margin. Remember, gross margin is 63, 43, 23. It can be anything. There are businesses where even the net margin is around 60%, when the gross margin is around 80%. All tech high service product, all software services product will be across this medium. So we have the gross and the net margins all together. Needs to understand this thing, and we will keep those gross margin and net margin always in our mind to go around it. But before we talk about the margins and the revenues that we are going to, the most important thing is we have to input a cost. We have to put in the money from this thing. So what are the cost thing? We have cost of goods sold. We have the operating expenses, as in the electricity, the rentals, salaries. Then we have the financial implication, as in the interests and other liabilities that might be accrued upon it, and definitely the liabilities towards the government, wherein who is supposed to charge us with the taxes, right? So that needs to be going around. So these are our costs. Remember this thing. So we'll come to a little bit of a financial literacy to you people. One, two, three, four. Absolutely, for your benefit, I'll come only with two: financial literacy. So financial literacy is essentially to a business acumen. Why? Because fortunately anyone can improve a financial literacy with certain small basic instruction and practices. What I need to you to do is to understand how to make profit. It is your revenue cannot be just the money flowing in, where which all sources the monies are flowing in. There are many heads which in the business might not be directly related to, but still the money flows in. For example, the profit that you earn might be parked in your bank account, and it can bring you a lot amount of interest. So you need to understand financial literacy. So asset of values is everything that comes around it. It includes your equipment, it includes your human resources, it includes your any fixed capital expenditure that you've already met, probably your property, your land. So we have to understand profit is definitely the asset. In fact, the mere objective of doing into a business or being into a entrepreneurial journey is to create profit. And remember, when we have sufficient excess amount of cash, we invest in other assets. Did I say you can invest in properties, you can invest in other businesses, you can invest in stock market, and so forth. Financial ratios and return on assets, what are they? We have the return on assets is net income that goes around it. Please understand, net income divided by the total asset into 10 is what the return on assets would be all about it. Return on assets, this would be into zero. I'm sorry, this will be into 100. Net income by total asset into 100 would be your return on assets altogether. So this you have to take it out. Inventory turnover, cost of goods sold. So whatever sold, so money is coming in, divided by the total amount of inventories that you have procured altogether. So you depends upon it. You might have an inventory of 10 items of into 10 quantities, of which only 80 items or 8 items of 10 quantities have been sold. So 80 out of 100 would be 80%, or that is the turnover. Zero point 0.8 is the turnover of your thing. So revenues per sales goes, this year revenues in the last year revenues minus 1 into 100. So this year's revenue is 2020-22 divided by last year revenues is uh, 2020-21 minus 1 would be your revenue. This is a whole thing. Minus 1 into 100 would be your revenue sales altogether. So financial liabilities is money owned. If you have taken money from somebody else, probably you've taken a loan, if you have taken a debt from a bank or financial institute, what is the financial health altogether? If you have any liabilities, probably your salaries or wages are being delayed or something like that. And what are the short term and a long term goal? How have you have the mix of it? Some companies take everything, all the liabilities, and put it in a long term growth of 10 years, 15 years, 20 years thing, so that they are going to pay it in an equated monthly installment or something like that. Some companies, on the other hand, would like to finish it within a fiscal year or maximum 2 fiscal year, and that is all about it. So there are certain things which are short term and long term. Slide absolutely out has been mentioned out here in this slide, right? So asset minus liabilities is current asset is your and total assets, basically current liabilities and total liabilities. If you have some liabilities this year and previous liabilities, you need to add it out. Those are the total liabilities that comes around it. If there's some profit, some assets this year and previous year's profit, those is what stakeholders equity would be all about it. So cash flow statement, what are they? This is the cash generated and how best it has been utilized, where it has been utilized. What are the operating expenses? What are the investing methodologies of ventures that you are doing? Financial expenses around it. So we need to do only one thing. We need to do read, read, and read. What do we read? Periodicals or in trade publication or industry publication, blogs related to your business, and so on and so forth. Critical thinking is the vital aspect of your business. A person is a successful person who can analyze the situation right in a right fashion. So you are constantly bombarded with information. You rely on information to make definitive decision. Remember, the essence of an independent mind lies not on what it thinks, but how it dissects those thought processes. So you need to think critically about the information. This is very important, and make your decision accordingly. So ask the right question. Assumptions. What are the assumptions that you're going around? Explore the perspective. What are the various ways those assumptions can go around it? Show the evidence before you actually take decision, and then consider the implication what might go wrong. Considering the implication, how can you cope up with the change situation? So these are the right that you need to go around it. So make it easier, see the trends emerges altogether. Absolutely. Similarly, group data, remember this is very true. If you have similar liabilities or similar assets or similar people who are taking loans from you, or only one particular customer who actually forms the bulk of your customer, you need to protect those data or organize them data altogether, and then analyze them and take decisions accordingly. So evaluate the information, be clear about it, evaluate what you are deciding upon. Is it based on fact, or is it just an opinion of yourself? Please, I repeat again and again, try to bounce your ideas, try to bounce your decision with certain intelligent people who are in your vicinity, so that there are no bias, this should be removed together. So make your decision, because it is going to affect your profitability, your standing in the society. Explore those options and go with your gut feelings. Many a times your gut feelings gives right decision. With this, we come to an end of this particular video. Thank you for watching.